Demos on a cadence so that we can see that the hardware and the software are working together, and let's demonstrate that with a working system. Introducing new portfolio work into the PI. So that's where the epic is approved, it's broken down into features, and then it's delivered to the product managers and the release train engineers, and they work with their teams, and it goes into the PI planning, and then it's actually built. And so this is like a, think of it like an on-ramp to the PI planning. And so ensure integration points. So SAFe likes to do a system level demo every iteration. That's really difficult sometimes. And so at the very, very least, you need to do it once every PI. And so at that PI, usually right before the PI planning, is something called the INA, that's inspect and adapt. So we're going to do a system level demo with everything integrated and see how it's working and make those decisions. Portfolio roadmap. So with SAFe, we have a PI roadmap, which is going to be a pretty firm commitment for one PI, and then past one PI, it's a forecast. And so a portfolio roadmap is a forecast because it can't be a hard commitment, but it can be forecasted. So based on forecasting the different value streams, you could combine those and see how they integrate and then make a forecast. So a portfolio roadmap can be forecasting out years, but it has to be made clear that this is a forecast and not a commitment. So when we plan out our roadmap, sometimes we have to account for market rhythms, like a toy maker, Christmas time. We have to have that product out on the shelves. I don't know, end of summer. If you're building electronics, there might be a particular convention you have to have it ready for, and so you have to deliver to that milestone or rhythm, or you're going to lose the value of that product. So deploying and releasing the portfolio. So we like to be able to release on demand, but at the very least, we have to release on a cadence, and so that's going to be those PI events. And so the system team will assist with integrating the work across those value streams so that work can be integrated and tested at those PI points. Supporting program execution. So the PMO turns into the Agile PMO, and then you create something called a LACE, the Lean Agile Center of Excellence. And the LACE is going to focus on the transformation. The APMO really focuses more on the ongoing activities that continue after the transformation. And so if you bring in an Agile coach, you bring in any kind of a consultant, they would be working in the LACE, and then the LACE would support the PMO, the Agile PMO. So the APMO supports the SAFe transformation. So once the transformation is complete, the APMO still exists. It doesn't go away. It's just like a PMO, but it's an Agile PMO. But the LACE might be completed once the Agile transformation is successful and stable. Then the LACE is no longer needed. And so we're going to drive operational excellence with communities of practice. So there should be a community of practice for Scrum Masters, for product owners, for developers, for QA people, for all the different domains of shared interest. So like, here's an example. We have RTEs, Scrum Masters, testers, Java people, DevOps people, and this is anybody's open to come. So like, say I'm a Scrum Master, but I really want to learn how to be an RTE. Well, I'm going to start attending the RTE community of practice. So there's a lot of opportunity to learn new concepts here. So then fostering operational excellence. So this is the LACE, the Lean Agile Center of Excellence. They focus on the safe transformation, provide coaching, establish objective metrics, facilitate value stream mapping workshops, the different activities which are critical to a transformation. There's different LACE models. The biggest companies use a hub and spoke model where you have a LACE, a central LACE, and then each business unit has their own LACE, and versus decentralized versus centralized. They all work, they're all acceptable. It just depends on how big your company is and how you need to make it succeed. So support operational excellence with the portfolio sync. So the lean portfolio management, how often should these folks get together and make decisions? Monthly is common, twice a month is also common, but it depends on what you're working on, how much work there is to do. So the purpose is to focus on the strategy and investment funding, agile portfolio operations, and lean governance. And so different items should be on the agenda each meeting, sometimes on a cadence, sometimes as needed. And so here's an example of a portfolio sync calendar. So here we're doing a portfolio sync every month, and then we're doing a strategic review every quarter, and then we're doing participatory budgeting twice a year. So this is just an example. I'm not saying this has to be this way at all. Here's another example of how it's done. So here we do PI planning every, I don't know what this is here, but we're doing a portfolio sync a couple of times in between the PI planning. So looks like it's quarterly, and then on the other odd months we're doing portfolio syncs. And so traditional versus agile contracting, another new concept we have to understand. So traditional contracting is, I'm going to pay you a certain amount of money, and I expect to do a certain amount of things. That's waterfall. Agile contracting is let's come into an agreement where we're going to work together for a period of time. I'm going to pay you a fair amount of money, and then we're going to deliver the highest quality product we can. So these are traditional contract types: firm fixed price, target price, cost plus, time and materials. These are very traditional and still used extensively. However, the agile contract is just like an agile team. With waterfall, we have fixed scope. I need you to do this, and then variable is cost and schedule. I'll get it done as soon as I can. It might take a little longer, and then it might cost a little bit more. Whereas agile, it turns it on its head. I'm going to contract you for 6 months, 2 PIs, and we have an identified schedule, and we have an identified cost because you're going to be here for 6 months. But what is going to flex is the scope. We're going to get done as much as we can, but it's going to be high quality, and when it's ready, it's ready. When it's done, it's done. And so we're going to only deliver highest quality in that 6-month period. Optimizing economic value with agile contracts. The goal is to seek a win-win approach that balances long and short-term economic outcomes for both parties.